Ladies and gentlemen, boys and girls, and everyone else in between, welcome back to High Fantasy, where as always we were talking about writing, the things that piss us off about writing, and the things that piss us off about writing in general. We are here to talk about the business side of writing today, on episode what I believe is 19, and not as always, we have a new co-host, Tyler, who is filling in for Director Alex. So Tyler,
hello there.
Tell us how you're doing, what you like to do, who you are, all that good stuff.
All right, quick introduction. I'm a nuclear engineer in the military. I'm in the Navy, and found High Fantasy by just looking for other people who are interested in writing and the different subjects around writing. I write it on the side. The longest thing I've ever written is about 150 pages, which is what I'm working on right now. And beyond that, I've just done a little bit of co-writing and D&D and role play and video games and every other type of medium that involves storytelling. So that's how I got into it.
Cool. All right. So as always, we will start with our progression. Colin, what have you done in the last month because we missed an episode? I cannot hear you, buddy. I cannot hear you at all. Can you hear him?
You can't hear him? I can hear him, yeah. He's coming through just fine.
Can you hear me?
There you go.
Yeah, there you go. Now I hear him on yours.
So I consistently told myself to write something so I don't get shamed. And I didn't write anything. Shame me.
Now you're
Shame
shamed. Yep, a whole month, nothing.
Between my various writing projects, Reservations at 8 and Andromeda's Love, I've done probably about 3,000 words, I guess, which isn't too bad. I'm getting close to finishing a pivotal chapter in Andromeda's Love, which is nice. It's also weird doing that with the co-writer because I've never actually co-written before, so
It's a lot of fun. I enjoy it a lot. It's a
For
good
people who
motivator.
have done co-writing, what is it like?
Well, how we're doing it is, so there's 4 main characters in Andromeda's Love.
Oh, like Golden Girls in Space?
Right, Golden Girls in Space. And so what we did is we decided that there were going to be 4 different types of characters. The captain, the engineer, the soldier, and the pilot. And we literally rolled a d4 to see who got which 2 characters. And we just built them up. So we did our own character development away from each other, then brought it together, and we're like, okay, these are the characters, let's write. And so we've mapped out at least the first 10, 12 chapters of the novel. And so we're each taking turns on different chapters. We're not writing in it's not like Jeremy, who's been on the podcast. It's not like you're chapter 1, I'm chapter 2. He's done chapter 1, chapter 2. I'm working on chapter 5 right now. And so we're just kind of going from there.
My co-writings worked a little differently. Whether it be, usually it's just someone locks into a perspective of a certain character, and you write until that character's perspective is kind of seen through, kind of like if you're taking turns in role-playing. And usually it's about 5 to 6 paragraphs of writing, and you swap perspectives, and the person overlaps with your timeline. Each of you keeps adding a little bit more to the timeline. So basically the format is react to what they said with your character, present something new and develop, and then you present something for them to react to. And you bounce back and forth like that. It's a great writing technique and practice.
You're not writing scenes, you're writing characters.
Exactly. It's all entirely character-driven, character-focused. It's all third-person, limited to your perspective. You actually aren't allowed to control their characters, so usually they're always set up unless it's an extreme situation. So it's fun because it puts you straight into their seat.
We're doing it differently where, I'll actually put in my writing, Captain Priscilla says something about so-and-so, and because the captain is his character, he'll come back in and actually fill in the dialogue. He knows the direction for the dialogue, but it's not exactly what we.
Helps create unique voices, though.
Right. It's kind of like playing with someone else's toys.
That is what's fun about it. but you can only play with them so much because it is still theirs.
Right. So, getting into the episode, one thing that is not talked enough about in writing, because we all know about writing and how to write and all those other things, but we're going to talk about the business of writing. What it means to run your own company, because that's what you are when you are a writer and you're making money. You are your own CEO essentially. And I'm sort of the guest on this episode.
You are the feature presentation.
Right. So a little bit about me. My undergrad is in finance. My master's is in financial services. Even though I don't do that for a living, I do have that education. I also was the financial manager for a company for 5 years, along with doing some consulting. But before we get into anything about this, I need to throw out the disclaimer that state laws are different. Things change every day on the federal level. So this might be a good primer, but look at your state, look at your federal government, go to a good CPA that you don't know, because, people are terrible. So, just don't this is a good primer, but this is not end all be all of your education on what it means to run a business. Do not sue us. This is just information for you in general perspective. I cannot stress this enough. Every state is different. The federal government changes every day. You cannot sue me for what I'm about to tell you, but I do have a good grasp on what's going on in these matters.
So I think so we're going to be covering things that are more of general guidelines, principles, things that you didn't quite know that you needed to think about, but things that are
even
important to
thought
consider.
about thinking about.
Yeah, things that you probably didn't know existed, honestly, as you're thinking, I write a book and I go to a publisher and they take care of everything. Well, your rights also matter and you need to know them. And you say,
but a lot of times they deal with you as though you're an entity, an independent writing entity, instead of just a
person.
Yeah, right. You're not just
You're a
person.
business.
You are a business.
You're a subcontracted business providing a product.
Absolutely, do your research, know your rights for your state, but consider these things before you get into writing.
Yes, exactly. So those are disclaimers. So we're going to get into this. So the biggest thing that you will run into as a writer and as someone who is making money from a not quote-unquote normal job, a W-2 job, is taxes. So if you're making money from another institution or just independent kind of money, you do have to file taxes every 3 months. That's probably the first thing you have to know.
Wow, I didn't know that. I already learned something new.
Quarterly taxes are a big deal for a lot of people.
Yes, I used to consult for a living, and I used to have to file taxes every 3 months and send money to the government, or they would tax me. They would tax me extra. Another big thing that most people don't understand is they never look at their paycheck. They don't understand like FICA. They don't understand Medicare, all that stuff. So when you work for a big company, say you work for Walmart, they pay 7.2% of your payroll taxes. That's something when you work on your own, you have to pay all up. So you say you get a book deal for $100,000, right? 14.4% of that is going to the government for payroll taxes, straight off the top, before you do anything. And that will cover your FICA, all that stuff, but still, 14.2% right there. That's before your income taxes. So on the $100,000, if you're an independent contractor, which you are when you're a writer, you're going to pay about 30 to 40% of that big number, that nice $100,000 number, in taxes. So before you quit your job, look at the taxes.
Yeah, something a lot of businesses, they do cover and they hide some of the expenses. They take care of things. They have deals. It's kind of like how when you buy things with a credit card, companies that want to offer the service to allow you to use a credit card to purchase things end up fronting a lot of the fees associated with allowing you to use a credit card, which gets transferred over to you as a customer. But like you said, once you're removed from the business aspect of it, you have to be paying that all yourself. You're paying the fees as well as the stuff that you're used to paying.
Right. Because I used to own part of a consulting company. I owned 10%, and we never made a lot of money. Like the most we ever grossed before taxes, like $400,000 between like 4 people. Not a lot of money. I was paying 40% taxes.
I'm sorry.
Well, that was no. We were grossing.
That's a lot of money.
That was before
Before.
Expenses and stuff. My salary was $42,000. I was paying 40% taxes.
Double what I make.
Oh boy.
But still, you're not paying 40%
No,
of
I'm
your
not
income.
paying 42%. I'm paying just one.
So, yeah, the thing with, so you need to figure out how your taxes affect you, because what I'm talking about right now is just on the federal level. Different taxes, different states tax different things. So, like, Texas has no state income tax, where Pennsylvania has a 6% income tax. So that changes things as well.
And now I know there's a lot of authors who not only do they write as a source of income, but the majority of professional authors work another job because they have to, due to some of the fees that you're associated with it, or not netting $100,000 deals every year consistently. For the show, that you've heard of stories of writers who find themselves in financial troubles even though they're netting a good source of income because they're not managing it correctly.
Right, and that's just one of those things where you have to be very careful with the money that's coming in, Another big thing is learning how to build a corporation. If you're going to try to build money as a writer, you should incorporate as a person. Most of the time, that is through what's called an LLC, limited liability corporation. Basically, what that gives you is the corporate veil, and that's a very important term. If you've never heard it, what that means is if you get sued as a corporation, they cannot pierce through the veil and take your private assets. If you're just working as like a proprietorship, they can seize your home, they can seize your car, whatever. But if you set up a shell corporation through an LLC, you have that corporate veil, so they can only seize the LLC's assets and not your assets. So that's a big portion of doing anything. So if you're making a dime from being an author, I would highly suggest incorporating in some kind of limited liability. If it's an LLC, an S corp is a good thing, but that generally helps if you're just if you have multiple people involved. But as an individual writer, an LLC is something you should do. And in most states, that ends up being like a $500 to $1,000 fee, depending on the state, to incorporate as an LLC. Okay, guys, you gotta talk a little bit. I can't talk at the screen for an hour.
Yeah, you're just so educated about the subject. I just don't want to stop you anytime soon.
Well, yeah, but I need a direction.
What is the first thing that you want to look for as a writer? Let's say you've talked to a publisher, you're trying to negotiate contracts. So you have a book, you have a finished product, it's ready to go, it's generated interest to the point where people are approaching you. Do you establish yourself as an LLC where you start looking into these protections prior to signing your first contract? Or is this something as you become established and start generating the income that you want to start worrying about? Do you need to make these deals with being an LLC in mind initially, or is it something that you would find yourself in later as you've started to generate revenue?
I mean, especially if you're going to go to a publisher, you should have some kind of business development involved. I mean, if nothing else, just to be, just keep the expenses separate. There's something every bank knows about. If you were to walk into the lobby and say, I need to file what's called a DBA, doing business as, you can file that with your bank so people can write you a check to maybe just not you personally, but to maybe a business account or just something with a different name so you can track those expenses. Tracking expenses is absolutely key to running a small business. So say, if I were going to do it, I'd be like Jacob X LLC doing business as, so people can write me a check. I can cash at my bank and they go, oh, this check with this weird, whatever. Literally, your DBA could be XYZ12712, and that would work as long as it's unique and it would tie to your account. But you should do that before. You should have something set up before you go to a publisher, because all those taxable things, if they're not set up, are hard to retroactively have happen once you start getting money. So you need to have that account, everything set up, which is relatively cheap to do, less than $1,000, before you really start getting money.
Now, is this something that you have to, so there's authors out there who are looking to become authors and looking to set this up. Is this something that costs money to set all these things up ahead of time? Is it something you need to, that everyone should just go and do? Or at what point would you want to go through the efforts of pulling this kind of a trigger?
I mean, a DBA, which, for the most part at a bank, that's nothing. I mean, it's just maybe $100. I mean, I know some big banks don't even charge anything to set up a DBA. That's a good thing, just to track the expenses. But if you're legitimately trying to make money, you should protect yourself before you start legitimately trying to make money.
Well, I know it's different from if a company takes on an LLC, so that way if they have like kind of a risky business model at the start with their investors, that they aren't attacked personally with their own personal investments, that the business itself is what they're investing and not the person behind it. Now, as an author, I haven't heard a whole lot of stories of someone writing something that, graphically assaulted the minds of a kid, so they got sued. Like, what kind of liabilities are we talking about with, being an author to where the LLC protects you in that sense?
Well, but where the LLC is really going to protect you is if you don't deliver. Look, there's a lot of fucks out there who are going to screw up, right? So the LLC will prevent you from being sued from your publishing company. You as a person, they're going to take every dime the company has, which, a lot of people are stupid and will put up their house or other things as part of the LLC. But you shouldn't. You should
don't do that.
Yeah. But there is
so you're saying
the corporate veil is very important.
Absolutely. I'm just trying to, as far as how it applies to writing, I'm trying to think. Yeah, obviously you wouldn't put your house like, no, this book is going to sell, I swear. Like, my house and my mortgage, they're on the line right here. Like, it's going to sell. Just give me your contract.
Right, but it's one of those, maybe, you have a short story and the publisher's like, look, we want a novel. And you're like, oh, yeah, I can fucking totes do a novel. And you can't.
And they pay you up front, and now you owe the money because you're not delivering on your end of the contract.
Right. So the corporate veil helps protect you from getting your house seized or other assets seized, as long as it's not a part of the company. And especially being a quote-unquote business, you can get business-level insurance, which helps protect against other things as well.
These are things I definitely haven't considered, as far as writing. My writing is not like it'd be great to write money and provide an income from just writing, but my initial inspiration behind writing was just I wanted to create a story and have people get excited about it and then be able to talk with them about it, and then that's the fun behind the writing part of it,
Right.
not just the business aspect. But these are things I've never really thought about. It's like, well, I could get myself into trouble even if I'm not going for profit. Get yourself in trouble if you sign a deal that you're not aware of.
Right. And that's one of those things where you've got to be really careful. There's a great documentary. It's on Netflix. It's a part of ESPN. It's their 30 for 30 series. It's called Broke. It's all about how athletes lose all their money.
Oh, that's a subject all the time. Yeah.
Yeah,
it happens a lot.
You should. I mean, it's a great documentary, regardless. But I mean, part of it is about they just don't handle their taxes well. Because the thing is you don't just pay taxes in the United States. If you go, say you get popular, right? You get a London Comic-Con invite. This is great. I get to go to London for free, all this other stuff. But what happens is you have to pay taxes on those flights. You have to pay taxes on those hotel rooms. Anything you sell in London, you have to pay taxes in the UK and the US for. There's so many things that a lot of people don't consider when it comes to paying taxes. Anywhere you do business, you owe them money. You go to Japan and sell $4, you fucking owe them money.
And I know the U.S. is usually considered one of the more harsh countries when it comes to taxes, where if you can pay double taxes, they're going to make you pay double taxes.
Yeah, if you live in the Kansas side and then you work on the Missouri side, and let's say you live on a borderline between two states, you'll pay state taxes for both. Not only for the company, for the business you worked at, you'll pay state taxes, and then for your Kansas income, you'll pay state taxes, and you'll pay federal. So it depends on the state borderline, but yeah, you can definitely get double taxed, and they have no problem with that in the States.
Oh yeah,
anything you do foreign is just gonna kill you.
Yeah, foreign's a whole separate subject. There's some countries that when you go over there, you end up owing money from what you got paid because you didn't see all of it up front.
Well, and here's another disclaimer: this is U.S. taxes. If you're in another country, don't bother listening to this episode.
But if you're paying other countries' taxes and you're from the U.S., you probably got to pay U.S. taxes too. Don't think just because you paid taxes somewhere else means you're not paying the government money here.
Right.
Exactly.
Right, and the U.S. tax law is insane. I'm going to tell you this. So, like I was telling you, I did taxes for a company, and the last year I was there, because we had a CPA go over all our taxes, and I prepared everything. It was literally hundreds of pages of documents. Like, here you go. Like a couple weeks later, he comes back, and he says, and I quote, "I think this is right." And I said, "You think this is right?" He's like, "As best I can tell from the new rules, this is right." It's like, we're paying you $250 an hour, and the best you can do is, "I think." And he said, "Yeah." And what he said is, if you can find another accountant who can do better, I'll refund you.
It's all about liability.
But that's the thing, especially in the United States, our tax law is so fucked that no one knows exactly what is correct.
Yeah, you have people who specialize in this who read it back and forth, but since there's always changes going on, by the time you get a pretty good firm grasp on it, there's enough changes to where, oh, well, that doesn't apply anymore, which makes this not apply, which makes that not apply, and then suddenly everything's all convoluted and topsy-turvy all over again.
So we've talked about some of the terrible shit about being a writer. And again, if you haven't listened to the episode from with TJ from Jollyfish, listen to that, then listen to this episode, and you'll never want to write another fucking word in your life. I swear. But
Not only could you go broke and not be able to make a living, you might get sued too. It's like, oh, what kind of message are we trying to tell here?
But there are some positives to creating this LLC. So you've built this corporation, Jacob Inc. or whatever you want to call it. If you are legitimately trying to make money, there are a lot of avenues for tax deductions available to you. So, say you're legitimately trying to make money as a writer, doesn't have to be full-time, but legitimately trying to make money, and you're writing a story about Japan. You can go to Japan and write that off on your taxes.
Yeah, tracking things that are business expenses is the best part about being part of like a small business has all sorts of exemptions in the first place. Anything you do, if you track it and you track what you pay for, there's all sorts of exemptions for small business to get your money back from what you've spent. Just
Right.
because America, more than
have
any country, encourages, small business growth. And
Do you
there's all
have
sorts of
to be
stuff.
an LLC for that?
You do not have to. You do not have to.
It sure helps.
It helps. It does help a lot. One thing if you decide to make money from something, you are a proprietorship. Period. Like the government's like, oh, you're trying to make money, you're a proprietorship. Period. That's just how it works. Period. So the there's all these Skype messages and they're distracting me.
I was going to say, one of the things I saw, it's a small sidetrack, but Walmart was recently planning on basically subcontracting their own employees to deliver products on their way home.
Right.
And one of the issues is that they're now using their car as a vehicle for business, which is going to cause a lot of problems. And unless you're writing your car off as a business expense, then they're going to
No,
start
anytime
going after you.
you expressly this is a good thing. So say you're an author and you drive to a con that's 1,000. It doesn't matter how far it is away, but this is a part of your business. There is a standard tax rate for depreciation on a vehicle. Last time I looked, it was about 54 cents a mile.
Also, the gas that you use for that trip is also tax deductible.
Well, no. Actually, no.
They don't overlap?
Either you do your expenses or you take the depreciation. You
Got it.
can't. Yeah, it's sort of like itemization or just like standard deduction. Generally, I always did better doing the mileage. But so, if you were to drive 1,000 miles each way for a con and you're going there as an author trying to make money, you can write off 54 cents ish a mile both ways. Which ends up being, that's $1,000 right there, roughly.
That works out pretty well.
Right. So, but it's one of those things where if you're going to be doing this for a living, you need to track everything. Like every receipt, everything. Like you need to track.
You went out to this business conference, you did this flight, you stayed at this hotel, you bought this meal, you ended up back here, the whole trip cost you this much. It's all business expense because it's part of you promoting whatever product or service you're offering.
Right. And even
Yeah.
if you don't, even if you sell $0 worth, you don't move a single fucking book.
It was still for the business.
It's as long as you are legitimately trying to do it, it's a business expense.
Just
And
don't put alcohol in there.
no
Yeah,
alcohol.
you can actually. That's fine.
Really?
Yes,
absolutely.
yes. Most
When I was doing
That's a business by
coordinating-
business basis, and if you're the business, then
Ah.
you can kind of make that.
Okay, yeah, because when I used to do financial coordinating for a company, I had to take off. Well, people had to bring me separated receipts with the alcohol not on it.
that's a company thing.
Okay,
It's,
that's a
it's
company
based per
thing.
company. Yep.
So here's a fun story. I have a friend. he works in sales, and he had a vice president who was fired for expensing too many lap dances. Not for expensing lap dances, for expensing too many lap dances.
Because it was beyond the expected business.
Exactly. It's, you know.
But
Yeah,
I mean that is
We
that
all
is
got
the
a few
thing.
lap
Like,
dances, but 10 of them?
look, I mean, if you were like writing a book and a lap dance or 12 got you a book deal, that's tax deductible.
And it's also beautiful. I just want to point that out too.
That too. I mean, that is so.
Oh,
I
that's
mean,
a story that will
we
keep
gotta-
on coming. So you can put that in your next book, or whatever. Self-project onto your character, however you want to pull it off.
We always mention George R. R. Martin, but if he didn't have experience, then he couldn't write half of the things he wrote.
Exactly. Another big thing to track is time, because you might be able to charge that. That gets a little different. One of the other really, really big deductions is the home office. Granted, home office is a big red flag for audits, but it's one of the biggest deductions you can take, because what happens is, say you have a home office, what you get to do is you get to deduct the square footage of your home office for all your expenses for the home. So say your home office is 10% of your house, you get to deduct 10% of your mortgage, 10%, actually all of your internet, all of your cell phone, 10% of your water, gas, everything else is a huge...
That's incredible.
Yeah. It's one reason, it's probably the
So your living expenses can basically become tax deductible because you
Yeah, pretty much.
take away from this. Yep.
So I mean, but it is a big red flag. Like, it's one of those things where I could probably actually, because I do consult on the side from my day job, but I don't actually take the home office because it's just not worth the headache.
But if you were a full-time author who's living off of the books you're writing, then absolutely.
Oh,
if you're
yeah.
generating enough revenue and you work out of home, then
Yeah, no,
perfect. You are
absolutely.
saving thousands and thousands of dollars per year.
When I
because that's
was
your
working
work
for my
location.
consulting company, I wrote off 100% of my cell phone and internet because I work from home. And I was living, at the time, I was living in a small apartment in my home office, which I did have set up as, its own individual space, was about 20% of my apartment. So 20% of my electric, 20% of my gas, 20% of my rent, all of that was deducted from my taxes.
So if you're in a one-studio apartment, is it 100% because you work out of the only room you own?
No, it has to be.
Wondering.
Actually, that's a good question, but it has to be where you actually conduct business. So if you only have like a desk and that's where you conduct business, and you don't have like a separate area, it's only that desk that is deductible.
Reading between the lines. Yeah, I guess they're going to gouge you for as much money as they can get.
Or stop you from abusing the money they're trying to get out of you in the first place.
Right. Well, and the thing is, anything for that home office is deductible against the business. So say you buy a brand new computer, that's going for the business, that's deductible.
I'm still mad I didn't take my Ireland trip and keep a higher documentation of myths that I looked at and then write the whole thing off.
Honestly, you could
It's
actually
research,
probably
right?
write the
Yeah,
whole
take a
thing
vacation
off.
for research.
I mean, the trilogy I've written is highly Irish mythology based, and yeah, that would have made more sense.
I never did hear about what happened with that trilogy. I know you brought it up several times, but did you get that
It's-
published? Like, is it
No, it's
self-published?
just sitting on
Is
the
it
shelf.
readable? Like, what's going on with that?
It's in Word format.
Okay.
Or- Scrivener, yeah.
So do y'all know the difference between credits and debits when it comes to taxes?
Credits and debits? No.
I don't
What
know
to do with taxes, I
much
don't. I know with
about
accounting, I know how to keep
taxes at
track
all.
of them, but
Okay, so there are tax deductions and tax credits. I mean, this is more of a general knowledge thing, but most that people miss. So deductions are above the line. So say you make easy $100,000, right? Deductions go against that taxable income. So say you deduct $20,000, your taxable income goes from $100,000 to $80,000, right?
yeah, I'm in the
Follow me?
military, so I work with that a lot. So, I have my fixed, or I have my set income, and I have things that are deductions, so they're not actually taxable, even though I still get more money in my bank account due to them. Not all of it's taxable.
Right.
Such as things that allow for housing, like the apartment I stay in.
Right. And for a lot of people, it's like your 401k. It might be taken out of your paycheck, but that's not taxable, so it's a deduction. So, what credits are, they're what's considered below the line. So, say you have $1,000 tax bill at the end of the year, and you have a $500 credit. Your tax bill is now $500. So tax credits are much more important, or much bigger deals than tax deductions, even though most people will never qualify for an actual credit.
Because deductions just means it's not factored into the amount that you're paying, but credits actually work against the amount that you have to pay is the difference.
Correct.
And small businesses get all sorts of, like that's another advantage of
They
claiming
can
LLC.
get-
You get all sorts of small tax credits that work, for you
Well,
in your
and
favor, make you
the
not have to
other
pay as much.
thing is you can go negative against the government. So say you owe $1,000 but have a $2,000 tax credit, the government will
collect
pay you
$1,000
$1,000.
Yep. It's always a good thing when you overpay, or with businesses,
Well,
when
no.
businesses end up overpaying and having credit at the end of the year, then they end up making money.
Right. It's another reason why I like the child tax credit, because it's so big, is abused as much as it is because you can get so much back. So for every child, you might be able to get like an extra 4,000 or 5,000 back a year, even though you owe nothing. Like,
Yeah, so you end up.
it is going to end up being a tax episode, but y'all also understand how the
Taxes are important.
taxes are important, and they end up determining how much you pay. So when it comes to taxes, y'all do understand. You all know about the stair-step system we have in the U.S., right?
As far as what bracket you fall into for how much tax you pay.
Well, no. Oh, yes. But what happens is, so it's like, I'm trying to remember the exact number, but it's like 0 to 10,000 is a certain percentage, 10,000 to something is a certain percentage, so on and so forth. Well, in the U.S., what happens is you only pay. So for that, you pay in the bracket. So say you make 80,000 and you're in the 28% bracket, you don't necessarily pay 28%. You pay, the first 10,000 you pay 5%, the next so forth you pay 12%.
Yeah.
Whatever. So
You pay different percentages based off of. Yeah. I get what you're saying. It's a tiered system, and you pay per tier. It's basically, we're going into calculus here, but yeah,
So-
you're paying larger fractions based on how you go up.
Here's the best example. So say the 25% tax bracket starts at $80,000 and you make $80,001. Only $1 of your income is taxed at 25%.
Yep.
So, and most people don't realize that. Most people, they just file their W-2 and move on, whatever. But it's something, when you're bringing in additional income, it's something to really look at. Because, that additional income essentially gets taxed at that upper rate. Because you're already, so say I were to publish a novel, I'm making $50,000. And I were to publish a novel and make $30,000. That $30,000 is going to get taxed above my income. Unless we can do deductions.
It's something. Well, yeah. There's also situations where, and the whole reason for that system is that there's people who will make a certain amount of money and they're right on the cusp of reaching the next tax bracket. It's let's say it's 50. They're making $59,700 and they get a raise for $1,000. Then in getting that raise, if they were to get into a higher tax bracket and you just do a flat tax, then making 60,000 and change, they end up getting taxed an additional 5%. Now they owe more money, so their raise caused them to lose money in the long run, which is why they have the tiered system.
Right, exactly.
You don't want to discourage people from like, oh, can you not quite pay me that much, because then I'm going to end up losing money because you're paying me too much. You don't want to fall into that scenario.
Right, yeah, the tiered system does work well for that. So, if you get a raise and you moving up into a new tax bracket isn't terrible in general.
This really is becoming a tax discussion entirely.
That's
the most important part.
That's essentially what it is. But besides getting sued, taxes are the most important thing. And
it's knowing how to file everything correctly. Like, the important thing is that you're a small business and you need to know how to file things correctly, know how to get your money back that you don't necessarily owe because you are a small business.
And this is probably the most important thing I can tell you, because look, we all have that friend, and I've been that friend at times, who'd be like, hey, look, I can help you with your taxes. And granted, my friend just had a W-2 and some mileage to deduct, so it wasn't a big deal, but don't go find the best person you can find. Because I have gotten on the wrong side of the 8 ball with the IRS before because of a bad accountant. Like, he literally did not file my 09 taxes. And like in 2013, they sent somebody to my house to collect. And I was like,
oh, wow.
And I was like,
I didn't think they still sent collectors, but I guess
and I was just like, I have no idea what's going on. Like,
you don't get phone calls from the IRS telling you that they've issued arrest warrants?
No. They were just like, hey, you owe this money. And I'm like, really?
Yeah, that's the big scam in my area right now.
Yeah, no, the IRS...
They don't do that.
The good thing about the IRS is they do document what they're doing, but, like, get the best you can afford. Don't go cheap, especially because once you start doing all these extra deductions, everything else, don't go to H&R Block, don't do TurboTax, go get a fucking professional.
I'm wondering how many people have been on the cusp of being a professional writer, but they feel like, oh, this isn't netting me as much income as it could, so I have to work this other job. Or if they're aware of the things, of the different kinds of money you could save, because you could easily save $10,000 or $15,000 a year. Let's say you're making around $50,000, $60,000 off of a book. You could easily save a lot if you were to, file as, being a business and get all those credits credited back to your account as a small business, where you could sustain yourself as an author. You just have to do it right.
At $60K, you could literally pay zero income tax. You still have to pay Medicare, Social Security, that kind of stuff, because you could not get away from that stuff unless you have credits.
But if you're someone who works a job that makes like 30 to 40 a year, and you write, and your writing does that, and it puts you to making $100,000 a year, but you're not doing your tax deductions right, you're not going to see a huge increase in pay for the work that you put forth.
Right,
that you
exactly.
could be seeing if you were doing it correctly.
Right. So paying, because most accountants will charge by the hour, but for most small businesses they only charge 2 or 3 hours. So it's worth it to pay that $750 to $1,000 a year to a very good accountant. And I cannot stress this enough because I've dealt with it personally. Read the reviews, talk to them, find the best one you can find and go to them. It's
like finding someone who's
money.
trying to sell your house. You want to find the right realtor. It's the same thing. You want to go talk to them, see what their plan is for selling your house. Well, yeah, because it's also a lot faster too. Yeah. But both of them can cost you or get you several $1,000s in either direction, depending on what their skill is. So yeah, absolutely, finding someone who actually is invested in what you're doing is absolutely important.
And as soon as you start trying to make money from writing, track everything. Track your expenses. track everything you're doing to make sure that you don't miss anything, because one missed receipt can be the difference between a good clean tax return and an audit.
Well, I guess in 200 or so more pages, I'll start setting up an LLC.
Colin, you've been awfully quiet.
We're talking about taxes.
I know. I don't know. This is just like listening to a nightmare constantly.
Yeah, well, that's what I told, like, when we had TJ from Jellyfish on. I'm like, man, you sound like writing is just the worst thing in the fucking world.
It
And,
I don't think we're not even promoting writing as being a difficult thing.
business
We're literally talking
really
about taxes. Yeah.
small
it's
business really is a bad thing.
but it's something that the majority of people never have to deal with because they're working for large companies who have all this stuff set up, you know?
Sure.
I mean, there are no, like, how many allowances, like, that W-4 you do when you start a job. That's not a thing when you're self-employed. I mean, if you're a contractor, you're paid on 1099 instead of W-2. I mean, the majority of people have never experienced anything besides quote-unquote normal taxes, just being a W-2 employee. And once you move away from that, it's a whole different ballgame. Like, I used to send the IRS $2,000 every 3 months. And
Yeah.
I was making 40 grand a year, $2,000 just every 3 months.
Basically, if you're going to be a writer, be prepared to send the IRS money every 3 months.
Yeah, pretty much.
You're a
Unless
quarterly
you-
bitch.
Unless you can
That's rough.
prove your expenses outweigh your gain, right?
Why should it be? Why do your expenses need to outweigh your gain before you're not paying the IRS money?
Because if you owe them for not making anything, then they're not going to charge you anything. If you're like, listen, you're charging me $3,000. I only made like $2,000. I don't know what you want
Well,
from me.
well,
But they're,
actually,
but they're,
refund you
they're
for
Well, actually,
charging you for not
Colin,
being good
this
enough.
is a good point. So say as your business as a writer, you incur minus 5,000, right? So your expenses are 5,000 over your income, right? That goes against your taxes, and you can write a portion of those taxes off for the next 3 years, I think. So even if you say year one you lose 10,000, but year two you make 5,000, you can write the expenses from year one off on year two and make $0 as far as the IRS is concerned. This is
That
very
Donald Trump's life story.
yes, pretty much.
Yeah, where you can go into debt and then make money off of your debt because you end up making money in year 5. Yeah, that makes sense.
Yeah, aren't you writing off other people's debt so that you're always making a profit but not making anything?
Well, it also
But
depends. But here's
Tax brackets are malleable.
tax brackets are highly malleable, but also like things like a depreciation. So you can, so say you buy a piece of equipment, right? $10,000 for something. I don't know, a printer, whatever. We're writers. I don't know what costs $10,000, but $10,000. So in year one, you spend $10,000, so that goes against your taxes, right? But that piece of equipment will depreciate over time. So say it's like 5% a year. So every year for 20 years, you get to take $500 off your taxes as that piece of equipment depreciates. And this is why you need a fucking good tax attorney.
This is something that, yeah, but like when you're talking about depreciating expenses, like short of your car, there's not a whole lot of expenses you have that are going to have, depreciation value over the
No,
course
you
of
could do it
time.
with your
Like as a
laptop.
writer, at least.
Your laptop, your chair, your
Yeah.
desk.
Hey, my laptop's going out of date. I need like a new 1070M. All right.
My
So
GTX
slap that
980?
in there, right?
Yeah, you could. I mean, you literally could. I mean, that's the crazy part about it is you could literally write this shit off and then appreciate over time.
And that's how you can make a living off of writing without making a whole lot of money. Is that, well, if you don't pay taxes because everything's deductible, then small business wins.
Right. Or, so when we were setting up our consulting firm, you could depreciate 100% of the asset in year one. So we end up losing, because we had to set up the business, the print, we had to buy a lot of equipment. We ended up losing, like, quote, on paper, losing like $80,000. We were able to carry that loss over like the next 3 years. Even though we didn't really lose the money, but we did lose the money according to the IRS.
See, now we're getting into accounting where you have assets versus, equity. Yeah, we're getting into an accounting discussion at this point. So.
It's all accounting. It's all tax.
Yeah.
But this is something that most people who write are like, yeah, I want to make a shit ton of money. Well, this is stuff you got to consider. And
Yeah, if you're the difference between net or you take home, or so let's say you make $60,000, but you only take home 30 because you don't do your paperwork right, or you make $60,000 and you take home 55 because you know what's tax deductible, you know where you're getting your credits, and you know how to run a small business. That's a big difference between whether or not you can sustain yourself off of writing or not sustain yourself off of writing, especially in other countries that have a cheaper cost of living.
In other countries are completely different. Like, this is just a U.S. specific discussion because every country is very different. How they treat income from other countries is very different.
Yep.
So, yeah, if you're not in the U.S., just anywhere you are, please look up your local tax.
Just research, just do your research of wherever you live.
Because how state taxes how your state taxes end up change depending. Yeah, it's a whole mess. I mean, it's a clusterfuck. I mean,
I'm surprised. So we're at the 52-minute mark, or at least we're approaching that now. I'm surprised we haven't brought up, since Alex isn't here, something. I was expecting a Wheel of Time reference where we're not dogging on it the whole time because she's not here.
I was expecting an Alex likes to stab people reference.
Well, she's not here, so I can't make that reference.
She always stabs people. The reference doesn't need to have her here or not. She
That's
just stabs
true,
people.
but yeah. So, well, she asked me a question about finding a job and stuff, and she threw out some numbers. I was like, to do what you want to do, you need to make 60, not 45.
She does have an adult job. Yeah.
It'll be weird. I'm not used to her being not free.
She did have one. I at least know that.
Yeah. So yeah, it's read up. Look, we're writers. We like to research. This is important because if you do this wrong, you're fucked. This will put you behind the 8 ball for years. I mean, if you're not careful with how you do your taxes, you're behind the IRS. You're behind the IRS for a decade or more.
And this is something that you could be on the cusp of, like, if you're a writer who has books that get published and start selling, you could be on the cusp of, can I sustain myself off of writing, or do I need to do writing and another job? And the difference could be just based on how you do your paperwork, which takes like maybe a week. We're talking a week out of the year of talking to someone,
or paying someone $500.
And then they take care of it for you, and then suddenly you net an extra, 20 or 30% off of your yearly income because you did your paperwork right. And that's a huge deal. Do you want to be a professional writer where the only thing you do is write, or do you want to work a side job? That's a big deal to a writer, especially with a lot of people who are aspiring to be writers as a sole career, which is, I think, the dream, obviously.
And the thing is like, if you are 100% solely a writer, there's so many deductions you can take off, right?
Mm-hmm.
I mean, this is going to sound ludicrous, but just talking to someone on the street and buying them a meal, that's a tax deduction. I mean,
true story. It really is.
Like Colin was saying, like, if you're a writer and you are, this is when it helps to have the LLC and everything else.
You're a charity case. No, just kidding.
Right. So, but you go to Ireland for research, that's 100% tax deductible.
But you said go to Ireland for research.
Right.
Listen, discovering new scotches to learn about their people, that's research, all right?
That is, right? But even though you stay with your family, you're meeting with family, that's a tax deduction. Here's another thing. The IRS allows for one fully expensed company retreat a year. So if you have an LLC, you can literally, as long as you have a board who can be anybody. So say your girlfriend or your wife or your best friend, you can go to Vegas, gamble your ass off, and write all of that off on your taxes. Like, it is insane what is a tax deduction, what isn't.
But it's all about knowing your rights in the first place is the
Exactly.
thing. It's
You
like,
just
if you
have-
know how to go about it and you know what it says, like what the letter of the law says, and you consult with someone for a very minimal amount of time, you can go and do that. You can say, you know what? What's up?
The biggest part of it, as far as Jacob's explained this to me before, is just keep the record of it.
Absolutely,
Yes,
yeah.
yes.
Keep a record of
100%.
everything.
Just
Keep
keep
your
the
receipts.
record of it.
If you use a credit card for everything, the company that you use your credit card through keeps track of everything. They itemize everything for you, and then you can use that itemization for an itemized deduction later on.
100%,
Just
yes.
absolutely, just keep track of whatever you buy things on. Keep everything on a card, and you can call it your business card. It makes everything tracking wise easier because you can track everything on that single card. Put everything in towards a deduction later on. Say this is the company I used for my in quotes business card. It could just be whatever card you're using to generate miles with, but you can use that as your business card. Put every expense that you put on that card and say this is what I use for my small business, whether it be a laptop or a vacation or I met this person and filled up my car with this. Yeah, it's
When I was paying the server costs for this network, I was deducting those from my taxes.
Yeah.
Because, I mean, that's what it is. Because we're making money now from this podcast network. So, we're legitimately trying to do it.
You're paying an expense.
You're paying an expense. Yeah,
you're paying expense for an income. It's still a small business. It absolutely is. You have a logo and a label and everything, and as long as you do your paperwork right, you can end up making money rather than just losing money because you didn't do your paperwork correctly.
Yep, exactly. So, yeah. I mean, I'm about done. We're about the hour mark, so I think we should start wrapping this up.
We made it here.
57 minutes. Yeah, we're there. We're definitely at the end.
Jacob being the entire conversation.
So, if you have any
We
questions,
talked about
now's the time
taxes
to
the
ask.
whole time.
It's
They're
all about
important.
taxes, man.
They are absolutely important because
Not
No,
just taxes.
yeah.
Well, not just what you're paying, but how to pay less.
So,
How to pay- yeah.
there's a great documentary on Netflix called Silicon Cowboys. It's all about compact computer. But back in the 90s, early 2000s. And my dad was an exec there. And we were talking one day, and he was like, "Do you know how we picked where you decided to build a plant?" And I was like, "How?" I was like, "Taxes. Then we consider taxes, and then we consider taxes. And whoever had the cheapest taxes is where we built our new plant." And so, I mean, they can ruin or make your life. Just simple enough.
If there's only one thing you take away from this episode, it's that being a writer means more than you think.
And if you want to be profitable, just pay attention, and you can.
Learn how to abuse the tax brackets that everyone else does.
So you can find us at brokenjars.xyz, patreon.com/brokenjars. We're on Reddit, Broken Jars Pod, I think. We're on Twitter. Just hit us up on Broken Jars. Broken Jars broadcasting at gmail.com if you want to email us.
Well, before we start plugging everything, I just want to point out, so in case people want to tune it out. So you said you wanted to mention what the next episode was going to be about. This is something we want to start incorporating. I think this would be a great time to do this.
Yep.
So what is the next episode about? What's the topic?
Colin?
Hopefully, we'll see with director Alex. But I'm hoping that we'll talk about manga, we'll talk about anime, we'll talk about the medium of those two, how it comes down to writing, the different structures that you use, character building, plot development, whatnot. There's a lot to talk about.
There really is.
We
It's
can
a
get
lot.
all into it.
All right.
I
So,
can be excited. Some things.
well, if you give me an anime to watch, I'll do my best to watch as much as I can between now and the next episode.
Attack on Titan's good. That's what I'm watching right now.
Is that on Netflix?
Crunch.
Well, we can
The
move
first
away
season
from some
is
of
on
the-
Netflix.
Okay.
The second
It is.
season is on Crunchyroll, and I'm not 100% sure on what the hell Crunchyroll is yet. I'm watching the second season for free. I thought it was to pay for, but all I did was
You get 2 weeks for free. So
you
yeah.
get, but I didn't even create an account. It's just letting me watch. I don't get it.
You get advertisements.
No? Well,
Oh, wow.
it tries to show me advertisements and glitches out because ad block.
Well, the idea behind it sure is like, commercials.
Full Metal Alchemist is on. It's on
Give me
Crunchyroll.
one. Give me one, and I'll do my best
Okay,
to
okay.
watch
Watch
it.
Hey,
the first
wait.
season of Attack on Titan. It's on Netflix. It's
It's a
fantastic.
drama. It's a drama that has action elements, and it's
Well,
pretty.
I know what Attack on Titan is. I know of it. I just have
And
never
people
watched
eat
it.
other people.
Right.
The
Ian and
story
Alex have
structure is
already
pretty
debated
interesting.
it.
It would be worth talking about because it is something that's extremely popular in anime right now, and we can talk about popular stuff versus not popular stuff, and why certain things work within the medium. So I think it'd be a good thing if you do
And I'm
research
gonna
on
actually try
it's worth
to
watching.
because Ryan knows his anime. I'm gonna try to bring him on as well. So, yeah. So hit us up on email, Twitter, Patreon if you want to give us your hard-earned money, which we really appreciate. Especially because of this newly found Zencaster, which is making this audio sound amazing. But yeah, so hit us up. Bye, guys.
Goodbye.
Hey, take care.
Thanks for joining us.